Good morning and welcome to a new program of Club Finance Genève in collaboration with Dukascopy TV. Today I'm André Vines and today we are going to talk about alternative investment. And for that we are more than happy to welcome Sven Miserey, who is the founder of Capital Advisory Partner. Good morning, Sven.
Good morning, André.
We are talking about alternative, but why alternative?
Originally, investors were constrained by a certain number of asset classes. You could invest in bonds and you could invest in equities. In the long run, you find yourself with high correlation, and alternatives are a way of diversifying your risk.
So, what are alternatives for the people who are listening to us today? Could you be more precise?
I think that first you have to see there is a difference between the asset classes that you can access. So as I was saying, you have equities, you have bonds, you can have more diverse asset classes. You can go into commodities, you can go into small caps, emerging markets, and so on and so forth. The second part of alternative diversification is the investment style. You can have investment managers that are going to be trying to aim to reach absolute returns, or that are going to be able to have investment styles of arbitrage, and all of that aims to bring you some diversification with the alternatives inside of your portfolio.
Yes, because we heard about absolute return, hedge funds, alternative investment. There is a difference, or is more or less the same concept?
Alternative investments is the overall universe. In other words, we can be talking about all the different pots inside. Private equity is part of the alternative investment universe. Absolute return funds are part of the alternative world. And real estate can also be part of alternatives. When we look at hedge funds, we're more looking at the structure and the investment styles, specifically inside of that.
And who is concerned by this investment?
Historically, we had the first hedge funds came out in the 70s with people that today are famous like George Soros, Paul Tudor Jones, with investment styles that were relatively volatile. And the volatility was accepted by high net worth individuals. So private investors were the first ones to come in and invest in this. Then after that, the demand grew. Because there is a due diligence to be done on the structure of the fund, because often these funds are in Cayman Islands or other jurisdictions, you need to have expertise in analyzing the documentation, but also being able to understand the management style and the team that is providing the performances. So fund of funds were created and allowed for pension funds, insurance companies, and more traditional investors to allocate in their portfolio to alternative investments.
Right. So what is the main benefit for them to invest in such a product?
Well, today we're looking at a very correlated universe. When everything works well, quantitative easing provides a huge amount of liquidity to the markets, and this liquidity allows for good performances of all the different asset classes. The problem occurs whenever you have an incident, and the incident will then suddenly correlate all the markets together. We saw that happen in 2008 and again in 2011 in the European crisis, European peripheral government crisis. The correlation then becomes a problem because most often all of your assets inside of your portfolio will take a hit. So alternatives give you the opportunity to diversify this risk. And the investment styles as well as the assets, both, will provide some diversification and visibility on the market. So historically, for example, we had hedge funds being created as the best equity managers would put their portfolio of best stocks inside of the portfolio, and then they would hedge 100% on the futures market. So you only had their overperformance to the market. Market goes down, they don't care. Market goes up, they don't care. What they care about is their stock picking. If you look at a correlated market, having this inside of your portfolio would mean that still you're only looking at the outperformance. So the diversification is a main benefit to investors.
Okay, so what would you advise for the people who are listening to us today?
Most often, people have a tendency to concentrate on past performance and going into deep analysis of past performances. So you have ratios, a Sharpe ratio, you have people looking at omega square, and so on and so forth, which are all great, but forget one of the most important aspects is how was the performance done and the human factors behind it. What's really important in my view is looking at first, do you understand what the manager is doing? Don't invest in something you don't understand. Because you will not feel comfortable and there's no point in doing it. And the second is there the possibility of replicating in the future the past performances? And that is the human factor.
Yeah, so it's a management of risk as well. So do you have an example of the hidden risk?
Well, you have an example that I like to use, which is when a casino makes a bet on the roulette, they are taking in your one, and they have 36 chances on the roulette, and 35 of which are in their favor. If you only place one bet a month, and you put 1% of your capital at risk, every month you're going to go up by 1%, so you're going to have a beautiful track record. But if there's one day when the roulette goes against you, you will lose 35%. So it's an asymmetrical risk. So this is one of the things that we look at, and the instruments that you can be trading can have these risks inside of them.
Okay, it's interesting. And what else do you check before you invest?
Well, you have to look at as I mentioned, the structure that you're going to be investing in. Is it an offshore? Is it an onshore? Is it created as a UCITS? Is it created as a partnership? Is it created as a trust or as a fund? The documentation is very important today. After that, you also have to look at what type of instruments they're trading, the asymmetrical risks, optionality if ever you're selling options. There's always that kind of risk. And you also look at, are the instruments traded listed on an exchange? Is there a price that is provided by an independent source? Do the service providers, the depository, custodian, administrator, auditor, perform correctly? Are they reputable? And also, do they have a contractual obligation to perform these roles completely? Because you could have a custodian that's only in charge of part of the custody, for example.
Yeah, I think that is very important because we don't know always what we are buying and all the calculation behind this complex product for the...
Or even with simple products, it's important to make sure that you have somebody that is independent, that there's no conflict of interest.
Okay. And what else have you recently invested in your company?
The main thing I look at is investing with, as I mentioned, instruments I understand, strategies I understand, and people I understand. I've invested with a long-short fund manager on Equities, whom I've personally known for over 30 years. And he has been managing money in a very consistent way for over 20, and I know his team very well. There's a commodity trading advisor, so he trades futures only, or everything is listed again, so there's no price discrepancy. That's a very volatile fund, but he also has a 25-year track record, which is rather impressive. And as he's systematic, the 25-year track record of the past should project in the future. And also a commodity trade finance fund that is replacing banks today. And the fund manager has been doing the banking side of commodity trade finance for the past 25 years or so, and I've known him for a number of years. Good. There's a trend to all the investments that we do, which is really making sure that we go with people that we know and assets we understand.
Okay, Sven, so we understood that you have a long experience in alternative investment. So if we understood you have an office in Geneva and in London, and I presume that if people are interested or if they want to get more information, they can contact you through your website.
Always with pleasure.
So it's the end of the program of today, the program of Club Finance Genève and Dukascopy TV. So we'll see you the next month for another topics. Bye for now.